In the world of British finance, two names are now at the center of a major transformation: NatWest Group and Evelyn Partners. Their story is about more than just numbers. It's about legacy, ambition, and the future of financial services in the UK. NatWest is a household name, a pillar of UK banking, serving millions with everything from current accounts to business loans. Its branches are a familiar sight on high streets across the country, trusted by generations for their reliability and service. Once the Royal Bank of Scotland, NatWest is now looking to reinvent itself for a new era, embracing digital innovation and adapting to the changing needs of its customers and the wider economy. Evelyn Partners, while less known to the public, is a powerhouse in wealth management, guiding affluent clients and institutions through complex financial decisions. Their expertise spans investments, tax planning, and bespoke financial advice. With nearly 2 centuries of history, Evelyn Partners is renowned for its personalized, high-touch service. Their reputation is built on trust, discretion, and a deep understanding of their clients' unique needs. The union of these two represents a meeting of scale and specialism, NatWest's vast reach and Evelyn's deep expertise. Together, they aim to create a financial powerhouse that can serve everyone from everyday savers to high-net-worth individuals. This isn't just a business deal, it's a strategic move that signals a new direction for both companies and the UK financial industry. It's about combining strengths to meet the challenges of a rapidly evolving market. Understanding who they are and what they stand for is key to grasping why this acquisition is such a pivotal moment, not just for NatWest and Evelyn Partners, but for the future of British banking itself. On February 9, 2026, NatWest announced its $2.7 billion acquisition of Evelyn Partners, a landmark move and its largest deal since the 2008 financial crisis. This signals NatWest's shift from recovery to aggressive growth. The deal brings Evelyn's 2,400 employees and $69 billion in client assets under NatWest's umbrella, instantly boosting its wealth management capabilities. NatWest isn't just buying a business, it's acquiring talent, client relationships, and a respected brand. The acquisition catapults NatWest into the top tier of UK wealth managers, diversifying its income beyond traditional retail banking. It's a calculated investment, reflecting confidence in Evelyn's profitability and future growth. NatWest's leadership sees this as a transformative step toward a more resilient, diversified future. Why are banks like NatWest so eager to expand into wealth management? Wealth management is about more than holding money. It's about expert advice, investment strategies, and long-term financial planning for affluent clients. Unlike low-margin retail banking, wealth management generates stable, high-margin, fee-based income. As client assets grow, so do the bank's revenues, creating a reliable buffer against economic swings. The sector is booming, driven by aging populations and growing demand for financial advice. For NatWest, it's a chance to cross-sell premium services to existing customers and enhance its brand as a trusted financial partner. A strong wealth arm attracts affluent clients and boosts loyalty across the group. Ultimately, it's a virtuous cycle of growth and profitability. Evelyn Partners may not be a household name, but it's a giant in UK wealth management. Formed from the merger of Tilney and Smith & Williamson, its roots stretch back to 1836. The firm offers integrated wealth management, helping clients build and protect their assets with tailored advice. In 2022, it rebranded as Evelyn Partners, focusing solely on wealth management after selling its professional services arm. Private equity owners Permira and Warburg Pincus scaled up the business, making it a prime acquisition target. With $69 billion in client assets and a national presence, Evelyn's reputation and scale set it apart. CEO Paul Geddes, a former RBS executive, brings unique insight to the merger. Its legacy of trust and expertise made Evelyn Partners a coveted prize for NatWest. When Evelyn Partners went up for sale, it sparked a fierce bidding war between NatWest and Barclays. The stakes were high, and both banks quickly mobilized their top teams, knowing that the outcome could redefine their positions in the industry. Both banks saw the strategic value: instant scale in a lucrative market and a chance to leapfrog competitors. Evelyn Partners represented not just assets, but access to a premium client base and a platform for future growth. For Barclays, it would have cemented its leadership in wealth management. For NatWest, it was a transformative opportunity to reinvent itself and signal a new era of ambition. NatWest's $2.7 billion offer won the day, outbidding Barclays and demonstrating its renewed ambition. The deal was not just about the price, but about vision and confidence in the future. The bank's leadership, led by CEO Paul Thwaite, was determined to make a bold statement. Their commitment to growth and willingness to take calculated risks set them apart in a fiercely competitive environment. Securing Evelyn Partners was a critical move, blocking a rival and accelerating NatWest's growth strategy. It sent a clear message to the market. NatWest was ready to compete at the highest level once again. The victory signals NatWest's return to the offensive after years of restructuring. It marks a turning point, with the bank now poised to shape the future of UK wealth management. This wasn't just a financial win, it was a strategic triumph that reshapes the UK wealth management landscape. The ripple effects of this deal will be felt across the sector for years to come. NatWest's decisive action positions it as a formidable competitor in the sector, with renewed confidence and a clear vision for the future. To understand this deal, you need to see it in the context of NatWest's journey since the 2008 crisis. After a massive government bailout and years of restructuring, NatWest finally returned to private ownership in 2025. Leadership changes followed, with Paul Thwaite taking the helm and shifting focus from survival to growth. The Evelyn Partners acquisition is the centerpiece of this new strategy, but not the only move. NatWest also acquired parts of Sainsbury's Bank and Metro Bank's mortgage book. These deals show a bank on the offensive, using its strong capital position to expand. The strategy: strengthen core banking and pivot toward high-margin, less capital-intensive businesses like wealth management. The Evelyn Partners deal is a cornerstone of NatWest's plan for a more profitable, diversified future. NatWest's $2.7 billion investment in Evelyn Partners marks a major strategic pivot for the UK banking giant, signaling a bold move to reshape its future. This acquisition is not just a financial transaction, it's a statement of intent, reflecting NatWest's ambition to diversify and strengthen its business model in a rapidly changing financial landscape. Under CEO Paul Thwaite, the bank is betting on wealth management as a key growth engine, aiming to capture new revenue streams and adapt to evolving customer needs. Traditional banking is high volume but low margin. Wealth management, by contrast, offers stable, fee-based revenues and higher profits, making it an attractive sector for banks seeking sustainable growth. NatWest already owns Coutts, serving the ultra-wealthy, but acquiring Evelyn Partners lets it reach a broader affluent market, expanding its footprint beyond the exclusive top tier. Now, NatWest can serve everyone from emerging affluent clients to the ultra-rich, creating a market-leading proposition that spans the entire wealth spectrum and enhances its competitive position. The acquisition also unlocks synergies with NatWest's vast customer base, offering seamless referrals to in-house wealth experts and integrating financial advice into everyday banking. This deepens relationships, increases customer value, and helps build long-term loyalty in a competitive market. As digital disruption squeezes traditional banking, NatWest is proactively shifting to advice-driven, high-growth sectors, positioning itself for resilience and relevance in the digital age. The Evelyn Partners deal accelerates this transformation, aiming to secure NatWest's future profitability and competitive edge as it navigates the challenges and opportunities of modern finance. This acquisition impacts employees, customers, and the entire UK banking market. For Evelyn's 2,400 staff, Joining NatWest brings new opportunities, but also uncertainty about integration. Customers gain access to a broader range of services, backed by NatWest's resources and stability. NatWest clients, especially the affluent, now have in-house access to top-tier wealth management. The deal reshapes the competitive landscape, pushing rivals to rethink their own strategies. Increased competition could mean better service and more competitive fees for consumers. Investors initially reacted with caution, but NatWest's leadership is focused on long-term value. A $750 million share buyback was announced to reassure shareholders as the bank pursues its new growth strategy. NatWest's acquisition of Evelyn Partners is more than a transaction. It's a defining moment for the bank and UK finance. It marks NatWest's shift from survival to strategic expansion, outbidding Barclays and staking its claim in wealth management. The deal diversifies income, builds on the prestige of Coutts, and creates powerful synergies with NatWest's customer base. For the industry, it sets a new benchmark and will likely spur further consolidation and innovation. NatWest's bold move redefines its identity and signals a clear investment in the future. The bank is betting on the enduring value of expert financial advice and its own renewed ambition. All eyes are now on NatWest to deliver on the promise of a stronger, more diversified, and profitable future.